The world's financial markets are in a state of chaos, and the storm is only intensifying. European stock markets opened to a brutal sell-off. Frankfurt's DAX fell over 6.5%, London's FTSE 100 dropped around 5%, and Paris saw a nearly 6% dip. The fear of a global recession is spreading fast, especially after a fresh wave of tariffs from the U.S. markets and Asia have also seen heavy losses. Japan's Nikkei plummeted by nearly 9%. Hong Kong's Hang Seng sank more than 13%, and both South Korea and Taiwan suffered steep declines. In China, investors warned the public to brace for what they called an ugly Monday. Despite the turmoil, President Trump remains unfazed. Speaking aboard Air Force One, he stated, "Sometimes you have to take medicine to fix the problem." According to him, jobs and investments are returning to the U.S., and the country is getting stronger. However, analysts believe this tough stance is spooking investors, who now fear a long, drawn-out trade battle. China responded over the weekend with a 34% tariff on all American goods entering the country. Economists are warning this could push not only the U.S., but the global economy toward a recession. With global supply chains so deeply interconnected, unraveling them abruptly is bound to have major consequences. For everyday people, the immediate impact is visible in pensions and savings. Even if you're not an active trader, your retirement fund likely lost value today. The good news? Long-term investors typically recover over time, but the short term may be rocky. Trade ministers in Europe are meeting to plan a response. A €26 billion retaliation in tariffs on U.S. imports is being discussed, but negotiations are ongoing. European industries, especially automotive and luxury goods, are already feeling the heat. Another major concern: if Chinese goods like low-cost electric vehicles can't enter the U.S., they may be redirected and dumped in other markets like Europe or the U.K., undercutting local industries. Analysts say today's situation is nothing like the 1930s, when similar protectionist policies led to growth. In today's globalized economy, tariffs are far more disruptive, leading to higher consumer prices and fractured trade relationships. Right now, uncertainty is the biggest threat. Markets hate the unknown, and without a clear resolution in sight, panic may continue. Economists hope for stabilization in the coming weeks, but if tensions escalate, a deeper economic fallout could follow.